The stock market is pulling back, and with every dip comes the same question. Is this the start of something bigger or just another buying opportunity hidden in plain sight? Getting that call right will make all the difference to your portfolio over the next few months. That's why tonight we're breaking down the market's current dip and revealing 8 ASX stocks that are primed for the picking. We've been here before. Just a few months ago during the tariff sell-off, we called the low on a previous show while headlines were dominated by fear. And it's because of this experience that major media outlets regularly turn to us for their analysis. With our insights backed by an AFSL license and a government-accredited trading program. So stay tuned as we cut through the noise, put this pullback into perspective and show you where the next opportunities are emerging. I'm Philip Tortevsky, joined by senior analyst Janine Cox and Pedro Banales, and we are Wealth Within. Good evening, Janine. It's just you and I today, yes?
No, look, there's so much room on the desk here.
There is.
It's so much more room to talk about the All Ords.
Yes, and we're covering a very important topic today. Obviously, the market is pulling back, so let's get straight into it now. September is holding true to its seasonal nature. The pullback is on. How significant is it right now, and is it about to get a whole lot worse? Janine, I'm going to throw to you. I also want to mention that we've got a few stocks coming up later on in the show, plus a few questions, and one of these patterns that is coming on later on one stock is almost a certainty. I shouldn't say a certainty, but almost always a sign that markets do go, or the stock will go up. But going back to what we're seeing on the index, September is pulling back. We know this, seasonally it is possible. Is it worse than what I guess is being portrayed out right now? Because there is this talk that, especially out in the US, the inflation's back up, the economy's starting to get a bit hairy, or is this just a natural pullback, nothing to fear, new all-time high?
Yeah, I mean, it's a really good question, and everybody's sitting on their seat knowing, but I guess until we see the other side of the chart, we don't have the answer until that point. But the forecast indicates that we could have a pullback of somewhere between about 8 and 14%, 14 being the worst case scenario. But why is this so important? I think that's the real question. This time is critical right now because it will signal how fast the market will run after this pullback. So the deeper it goes, then that begs the question about the length of time that we could run. It could run longer actually if it goes 10 to 14. If it only pulls back about closer to 10, then we could see, a decent run still, but it may go for shorter time. So that's the real question right now. How fast is it going to go and for how long in time? But it's a time to really get excited, I think. Yeah. All right. Now I'm going to go to Pedro because you raised a really important point just on that, and that is, it's one thing to see the pullback coming and kind of identify where are we now, what's it likely to do. But I guess the more overriding thing, especially for investors, is it's going to come to the point where they're going to be making decisions whether they sell, whether they don't sell, and that impacts the portfolio moving into the next, I guess, year, especially if we do see a new all-time high. So Pedro, let's bring him in right now from Taiwan. Good morning, mate.
Good morning, guys, and my apologies if you can hear the rain. We've got a typhoon at the moment, so it's actually calmed down now. So let's get onto it quickly. Yes, I'm hoping you don't get blown away. Stay tight for an hour, mate. But look, let's just get your thoughts, obviously, for investors right now, because they're sitting there thinking the market's pulling away. Do I close? Do I not? Obviously, a lot of stocks have been in decent profit. Is now the time to be asking those questions, or is it just a case of, hey, this is a pullback, you're not seeing any confirmation yet, ride the downside and move on?
Yeah, for now, I don't see anything that really, warns of, something bad impending happening. The pullback is within reason and within the normal ebbs and flows of the market. On our Monday show, we touched on those critical levels to watch out for, and they're basically, that $8,800 level, and also the 8,600, I would say. To watch out for. If the market breaks below those with certainty, then you could expect a little bit of a deeper pullback. But for now, I don't think there's anything to worry about. And if we do bounce from these levels, I agree with Janine. The market may be strong for the short term, but it wouldn't be as sustained as if we have that that pullback now and then a nice sustained up to break the all-time high.
All right, now let's get to the juicy stuff. The team's put together 8 stocks that are September pullback or market pullback beaters. So this is exciting. What have you got for us, Janine?
Actually, take a look at this first one. You can't miss this. This is a financial stock, AMP. Now, this is what was called a dog stock, and I'm going to show you why. Why could it have significant upside? Let's take a look. This really puts it into a totally different perspective. It looks like a mining stock, doesn't it? You know, something that's been sold down so terribly over time. Now, you will have heard us talk on the show before about these basing patterns where stocks trade sideways, where the money in the nose trying to accumulate the stock, and then you see that first initial rise that we've got here and a test. This was a real test, this pullback, which coincided with the Trump tariffs, really did a good job for the setting up of AMP going forward. We have seen a strong rise, but I don't think the run's over yet. We could see a bit more of a pullback, ideally, to around $1.50. If it does that and we get some confirmation, then this thing could be off. But in saying that, if it closes above that high in January 2025 quite strongly, it could just continue up, straight up. So I think AMP looks fantastic. If we look at the long-term trajectory of it, we can see there that, you know, looking at the trend again, which we often like to do to see how far it could go, we can see shorter term, it's actually broken through that angle. We go higher up, we can see that the longer term trend, it's definitely looking like it's come through that as well. So that's all positive signs for AMP, and it's one of the really important things to look at, as well as that test and that pullback. And our advanced students would be saying, yep, that's interesting to me because I can see a certain pattern unfolding on it.
Yeah, just on those patterns quickly, I want to bring up this book. This is Dale's book, How to Beat the Managed Funds. The technique Janine just drew there is in this book. It's a great introduction to getting started in the stock market and building your portfolio into 2026. Please go and check it out. The link is in the description in the comment section below. But as always, if you want to take things to the next level and get serious about your share trading, go and visit the website and check out our courses. They are government accredited and backed, great information out there. I just want to go back to this one here, Janine, and ask the question, because what I'm looking at is potentially a major turning point for this stock. So when you look at AMP, okay, we're talking about stocks that could perform coming out of this next dip, but is this something that could perform way longer than that? Because when you see these major reversals, breaking of momentum, after such a significant correction.
Exactly. You've got it right, you nailed it right on the head, because if you look at the right-hand side of this chart here, you can see what Phil's talking about. I mean, it's come back, and that pullback was in line with the angle of that overall trend, which is what we like to see, the fact that it's actually hit that and then pulled back. It's come through it. There was no resistance to that as it went through, but now you like to see a bit of a touch, you know, when it comes back. And just nestle on that line and then take off. That's the ideal scenario. But if it, like some of these mining stocks we've been seeing that have been making these pullbacks and then just taking off through those highs, if it did the same thing, well, you know, anything's possible really. You're talking $3, $4 as a possibility for AMP down the track.
Yeah, and just quickly on those miners, what a hot time it is to be in the mining sector. I mean, we've been talking about it for months.
Oh yeah, we're coming up with some good ones.
Geez, gold, silver, a couple
we've got to talk about tonight.
Yes, we're going to cover off some great ones in that sector, especially coming up, maybe the next or the one after. But anyway, let's get to the next stock, Pedro. I believe we've got Woodside up there.
Yeah, talking about great ones, and look at that, I got Woodside, so what a coincidence.
What a shock.
Now this...
Pedro and Woodside.
What a shock. Now,
it's like a love affair, isn't it?
Now, you wouldn't be surprised. It is, and you know, I can't get away from this stock, unfortunately. Not so unfortunately, because I love it. At the moment, I think this pullback, we've seen the stock, and I'll start here on the weekly chart here. I wanted to just have a look at what's happened recently, because we've had this run up from July into August, and the reporting, okay, it wasn't that great. It wasn't above expectations, and that's why the market didn't really fall in love with it. But the company is doing great, and it's developing, you know, that the new LNG infrastructure that's coming into play now in 2026. They've got some great projects down the line, and now we've just seen it have a bit of a dip, and this is what I would call a dip, because right now we're seeing the stock pulling back from an overall uptrend. It was trending up, and then now it's dipping down low. So the question is, do you buy the dip? Now, my answer would be, have a look at this high here that we've had, that $27. It's now trading at $22. That is a very interesting level for this. It's basically taken a certain percentage of a discount. It's half price at the moment from that high. If it manages to maintain this level here and then break above, gee whiz, I tell you, this one will be on one of the biggest runs of its history, because really it's basically primed to go. I think it's doing something like it has done here back in 2020, where it's had that uptrend, pulled back, and then starting to trade back up. And we did end up seeing a rise of 164%. So if we were to see something similar at the moment, 164, we could say that it could rise up to anywhere between $45 to $50.
Yeah, just so interesting. I mean, when you look at the way Pedro's analysed that stock, you show that to most people that aren't looking at the way Pedro's looking at it in terms of time frame and the big picture, and they'd look at that and go, 5 weeks down, a month down, that stock's crashing. I want to stay away. Whereas, giving it that big overview, and maybe this is a question for Pedro, but what gives you that confidence when you look at it like this to really say, okay, you know what, I'm comfortable in the pullback, and to me right now it is just that, because I want to flesh that out a little, because we get so often on this show, people come in and look at a stock. I mean, last week there was a gentleman that came in and said the stock was down 2% for the week, and he's saying the stock's crashing. And maybe speak a little bit to that, why that you have that confidence in a stock like Woodside, even though it's falling right now, and how you can work through that to say, hang on, it's falling, but I already know, I'm looking on the white space of the chart in terms of what should come next. That gives me the confidence on how this one plays out big picture. So maybe elaborate a little bit on that, because I know people can get caught up and confused in saying, well, it's falling. Why are you even looking at this right now?
Yeah, I think that's a good question. I think the key word that you said there is that big picture. It's really to do with the time frame that people analyze these stocks. I see time and time again, students come to us, when we're having our phone call, they say, I look at the daily chart, or I look at the hourly chart. I've even had some that have gone down to the 5-minute chart. That's not the best place to even start. It's not a good playing field at all, I would say, for traders. You need to look at the bigger picture. And the bigger picture on Woodside, if you have a look at this, and I'll just draw another line here, just to add further confluence, it has broken clearly above that downtrend. And every time that it's done that in the past, we have seen sustained runs. You don't have to go back very far and, just quickly apply these lines here. Every time that it's broken above these trends, it's had a nice, beautiful run, and it's doing exactly that at the moment. And finally, I would say that this is one of the top 20 stocks in our market. In terms of the gas players and the oil players, they have the lowest cost of production out of all of them. That's substantial, because that means that if the oil price does go down a little bit, they're going to be best positioned to weather that storm. So all of these things together, you've got a good quality stock pulling back, bigger picture looking good. I don't think you can get any better than that.
All right, we'll keep an eye out on that one. Thank you for that. Now let's move on to the next stock, getting into that mining sector space we just spoke about. This is exciting.
Yeah, this one's good. Pilbara Minerals. Now, a lot of people like this stock. It's a highly traded one, good for short-term trading, but may end up being good for medium-term as well in the not-so-distant future. So let's take a look at that. It has good runs. What can I say? So first of all, we want to know, what's the personality of this one like? What is the potential? If we look at the run when it got into a bull market, we had 140% over a number of months from lows. That was 800% in this run. We come back to this low up here, and to the high, it went 185. There's another one in there that I missed, this low here. And you can see that it's 118. So being conservative, I'd say at least 100% run on any of those rises. But what if the stock is still in a decline? What does it do on these rises? Well, if I get rid of that one, we can see it does about 50% off the low. So we're looking at the next one, we can see Off this low here, we've got about 50%. Now, it's no coincidence that these are the same. Some of our students will understand that straight away, but there's 133% off that low. So we've started these bigger runs. It's different to the decline. The decline was showing that it was capable of doing around 50. Now we've extended that well beyond that. Here on the weekly chart, what we're seeing is that it's actually come back to test that gap, filled the gap, and now we're seeing a bit of a sideways consolidation. If we get a further test to the downside, I'd actually be really excited about that. A lot of people, like you said before with Woodside, get distracted by the pullback, they go away and look for something else. But that's the time when you really need to stop and be preparing for that next opportunity. So looking at the chart again, you can see that if we get this pullback, a continued one, and then it trades back above this high, the stock could end up being somewhere between $3 and $4, which would be pretty exciting for Pilbara. But again, it's good to see that test, particularly on the monthly chart.
I'm going to put you on the spot quickly before we go on the next one. Is the low in? Yes or no?
Is the low in? I think the low is in at the moment. Yep.
Cool. All right. Let's get to the next one. Fortescue Metals, Pedro, another miner. What are your thoughts on this one, mate?
I think this one is looking quite interesting, and the level that it's bounced off is a very strong level, and that is the $15 level. And I'll just quickly mark that out. So at a little bit of context, you can see that that level has been very important, even dating back to 2021, 2022, and more recently 2025. So already the stock has had a go at trading below that level, and every time, yes, it's dipped a little bit below it, but it has been picked up. That means that sellers aren't willing to sell it down for lower than $15, and buyers are looking at good value at $15. Now we can see that every time that it does bounce off these lows, and I'll just take out this anchor tool, every time that it bounces off that $15 level, we see 51% rise. Let's see what it did over here, 52% rise. Now it's currently done 33. So we could assume that it's going to do at least that 50% rise, and that would take us to around that $23 level. So $23 from the current place that it's trading at is 20%. So that's a nice little runway. And I always talk about that runway. I like to have a little bit of meat in it before we go to witness some strong resistance. And funnily enough, that coincides with a very strong resistance level that it's met resistance at multiple times in the past, which is that $23 level. So it's kind of trading between that midpoint at the moment. I think it's in a good position. If we go to the weekly chart, you could have picked it up at that $15, but that would have been a little bit risky. However, have a look at this move that is done here. And this is why buying the dip sometimes works out. Of course, you're not going to buy it just because it's come down, but you do wait for some confirmation that it is, starting to trend up again. And now we're seeing a very interesting pattern. I'm sure that, our students would be looking at this and thinking, all right, well, this is unfolding in an interesting way. Maybe, if it trades above that $20, it could be looking interesting. So I actually do quite like FMG. I think that they're well positioned. We're seeing iron ore starting to bounce as well. So there's a lot of things, a lot of infrastructure projects that are happening in Asia as well. We're seeing more countries wanting to import our iron ore. So everything is lining up. P ratio is great. They've got a great dividend yield. I think that this stock is going to get picked up, and it would be a good time to look at this dip and see whether the run will continue.
Now, speaking of that dip, I want to put you on the same spot I did to Janine a second ago. Looking at that chart, are we likely seeing that the low is in or not yet?
It's looking like the low is in. It's the third time that it's tested that $15 level, and now it's looking like it's trending up.
All right, there we have it. Two stocks looking like their major lows are in, so keep tuned and an eye out for those ones for your portfolio. But that is it for our first four stocks. Anyway, stay tuned because in the next slot, there is one pattern, as mentioned, that is pointing to a massive run up that is coming next. But now, time for our trending topic this week. Janine, what have you got?
Well, it seems that IAG is in trouble with the regulator, ASIC, which may have a negative impact on their share price. So should you switch out of IAG and buy one of its rivals? Well, before we answer that, as a consumer like me, you probably hate to think that you're paying more for insurance than you should. Meanwhile, insurance stocks have been rocketing higher. So it is concerning to hear that the Australian Securities and Investments Commission initiated federal court proceedings against RACQ Insurance, and this is a unit of Insurance Australia Group, alleging the insurer misled thousands of customers with false premium comparison pricing in renewal documents over a 5-year period. The regulator's complaint highlights that RACQ practices may have hindered customers from accurately assessing and comparing premiums across insurers, potentially depriving them of cost-saving opportunities. Now, what really struck me was this ASIC claim that RACQ sent misleading renewal notices to more than 570,000 customers, allegedly hiding premium hikes as high as 40% during a cost of living crisis. If this is true, it is shocking. It's great that the regulator, though, is checking. They shouldn't have to, though. Let's take a look at the chart.
That's actually it's crazy, isn't it? The point to me that really stands out is, and sorry, you were about to go to the chart, but you do have this cost of living crisis and they're just screwing it in there.
Well, insurance is a huge bugbear. People often complain about it. There's always things on the news about people paying too much for their insurance. So yeah, it's right up there. There's a lot of people are going to be pretty upset about that and make a comment. You know, if you're unhappy with what's going on, make a comment about insurance.
Yeah.
I'd like to hear from you. All right, shall we go to the charts?
Let's do it, yes. Might as well buy the stock if we can get them back somehow.
Yeah.
Or sell the stock, make money off the stock.
That's right. Short sell, you were saying? Or
well, whatever puts more money in people's pockets.
Depends on the direction, isn't it?
That's right.
All right, so Insurance Australia Group, we've got that on the screen right now. It has gone to a new all-time high over time. So we've seen that recently rocket through to a new all-time high, but now a little bit of wind's been taken out of its sails and it is trading sideways. But we know insurance companies do, they suffer when interest rates are going down. So when interest rates are on the rise and the view is that they'll be higher for longer, insurance companies can make more money. When the opposite happens, we can often see the share prices fall away. So there's all this talk of cuts to interest rates, and so we're seeing insurance stocks slow down a bit. But IAG's held up pretty well in spite of everything that's going on, but let's give it a couple of weeks. I'd like to see these insurance stocks, particularly IAG, come back to, in this case, the angle of this line. We've got about $8, but I think a dip below that to come back and test that $7.10, possibly $7.50 or $7 to $7.50 would be ideal, and that would then potentially set up for a new one.
Nice.
QBE, we've got QBE Insurance Group. Now, this is the one that I'm suggesting that people take a really good look at. Reason? Because the all-time high is way up here. Now, it doesn't automatically mean that a stock is going to trade it back up to its all-time high and take it out. But in the case of these big stocks, this is often the case, especially if the market goes into another swing into a bull run. We're likely to see that happen. So let's take another look. Let's have a look. We've got 40% potential upside there if IAG keeps going. But looking at it right now, we've still got the potential for a pullback to the angle of this trend, which I'm applying to the chart there. And same as IAG, if we see that pullback, I'd like to see it come back and test the angle of that line properly, possibly a bit of a sideways consolidation. I'm suggesting this is one to be patient with, and get in at the right time. But I'm suggesting once it gets back above these highs here, there's some good money to be made.
All right, there you go. If you want to get one back at your insurers, check those two stocks out. And as Janine said, not just yet, but keep a close eye on them. Now, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Now, I know, Janine, you've got a few coming out of all the sectors today, but again, what have we got?
Well, everybody likes to see a good bank. Now, BOQ, whether you think they're a good bank or not, it's all about the potential, isn't it, and what we could make. And this is probably one of the most unloved banks on our market right now.
Why is that?
Look, I haven't studied the metrics of BOQ. I've been focusing on the big banks, but just looking at that, the angle of the trend, it's still stuck under it.
Yeah.
You know, and so once we see that BOQ, and it's tested that already, we've seen a bit of a pullback to it. Once it breaks through the angle of that trend, we could see a decent run. But at the moment, it's not ready, and that's as simple as it is. Short-term traders, just wait, because we could see a bit of a consolidation around this $7 mark and an opportunity to make money towards the $8 mark. But if you're more medium to long-term, you're going to wait until it really proves that it's on its way.
Because when it gets going, it can provide some good growth. I mean, you're talking about a bank, and yes, okay, last year was a stellar year for CBA, for the big banks in terms of price movement, but generally speaking, they don't move as strong as something like a Bank of Queensland when it gets going. So,
well, Bank of Queensland used to be one of the best stocks to trade because of the way that it ran. And I think we're not in that zone yet with BOQ, but if you just have a look at some of these rises here, this is a monthly chart. You know, once BOQ gets through that, and I'll draw the line in the sand, then it could go gangbusters.
Yeah, all right, watch 850, fantastic. Now let's get to the next stock. Pedro, what have you got?
All right, next one is Horizon Holdings. Now, I've got a little bit of a history with this stock, to be honest. When it initially IPO'd back here in 2010, that's when I first started to get interested in the stock market. So that's a fun fact. I saw the IPO on TV, and I thought, oh, this looks great. I didn't undertake the IPO. I probably should have, because this is one of those IPOs that did shoot up, and I'll just show you how much percentage. That's 121% that it ended up trailing up, and that's unusual for IPOs. Usually they trade at a huge discount before coming up again. But the good news is that I've got a second chance, because now it's back to that, almost to that IPO level, which is interesting. So I'm looking at it again with all different lenses. Of course, I've gone through the course, and I've a lot more experience since then. So now I've got a pattern as well to have a look at, which is very important. We can study the history of the stock and see what it does. And it looks quite cyclical, and it looks like a bit of a trading stock at the moment. You can see that it has these lows and these highs, and they look quite uniform and predictable. And at the moment, this dip that it's had, and this is exactly why we're talking about dips at the moment, we've got that September low there. It does look like a dip in an overall uptrend. It looks like it has broken above this downtrend over here, and now it's come back to retest it. It hasn't quite come back to the angle of that trend line, and now it's pointing up. So that, to me, is a very interesting pattern here. So yeah, I would say this one is ready to buy the dip.
Yep, it looks very good, that's for sure. All right, Janine, next one.
All right, the next one is going to be interesting to a lot of people. Whether you like Woolies or Coles, this is Woolies. Let's take a look. All right, on the chart there, you can see that it's pulled back, but it hasn't come quite back to where its potential is to fall. So right now, there's a possibility it could end up somewhere around $24, $25 as part of this current decline. So this is about getting ready for these big opportunities when they come. A bit more of a market sell-off in the short term will help Woolies flush out that low. It may actually fall short of where I'm expecting it to come back to. It might come back less. It could turn around where it is right now as a possibility. But I think that once this happens and we start to see a basing and a bottoming pattern, as we've seen in prior moves, you can see all of these pullbacks and sharp falls away, and then it has some sort of a basing pattern and then turns around and starts to make its move back up again. And that's what I'd be expecting for Woolies. So those of you who are looking for good medium-term opportunities, Woolies, I think, will provide that eventually once this bottom comes in.
Yeah, fantastic. All right, now we've got some really good micro-cap stocks coming in some of our email questions, so stay tuned. But there's one more stock we want to get through in this piece, and that is New Hope Corp, I believe, Petra. I think this one for me is probably the most exciting, but we'll let you say what you think.
I can see why you think that, Phil. It's looking very interesting, isn't it? It's bounced off a critical level here for the stock at around that $3.30, and now it does look like it's pulling back a little bit. And on the monthly,
it does look like it's pointing down. It hasn't managed to break above this trend yet, but it's looking like it could very well do that in the future. I mean, it's had this beautiful run up, got rejected a little bit, but now it actually came out with good reporting. So it's interesting. This is one of those stocks that got sold off on a good report. But I mean, with coal, it's looking like it's coming back in favour. Not in Australia, obviously, but in other parts of the world, and they're well positioned to be good exporters. So it's come back to these levels here, where it's found price agreement in the past. You can see there's multiple opens and closes around here. So something interesting will happen. I would say that if it does break below this low, I would say around that $3.60, then I'd be a little bit more bearish on it. If it does find some support there and then manages to break above this level here at around that $4.60, then we could be in for another run. And look what happens when it does run. I mean, when it runs, it really runs, 540%. And back here in 2016, we've got another 260%. So again, another cyclical stock that looks set for the next cyclical run.
Yeah, looks very interesting, but boy, it's got to hold those levels. Now, just quickly before we finish off on this, Janine, your pick of the bunch of those 8 that we had.
I would have to say it's probably Pilbara. Yeah, I like Pilbara.
Yeah, right, cool. All right, didn't think you'd pick that one.
There you go.
Pedro, best stock?
Yeah, surprised me as well, Janine. I would pick Woodside at the moment, of course.
Well, that's
looking quite nice.
That was probably
that is not a surprise.
That's probably the one at the bottom of my list.
Oh, there you go. All right, great stuff.
Right.
Great stuff. We've got a lot more to get into. So let's keep going. But moving on shortly, we have a major ASX player that just released some news to the market, which could boost its share price a lot. But first, let's get into your questions. Now, Matt writes, just want to say, since doing the share diploma, I'm trading very well and very happy with my returns in my wife's super and mine, which is nearly doubling both in just under 2 years. Well done. Now, I want to take out a margin loan. So if you had to give someone one piece of advice when using a margin loan, what would it be? I know Dale once said, never use 100% of your capital. Now, Janine, I'll get your thoughts here because when we talk about, first, well done on.
I was just going to say, congratulations to Matt, and he's not only a student, but he's a football coach. Can I say that? I can't say soccer, can I? That'd be a dirty word in the football area, wouldn't it?
Yes, it can be. Yes, but I mean, look, portfolio's performing well, super's performing well. Good on him. He's educated. He's doing all the right things. But now we talk about margin, and it's a different conversation because you're using leverage.
Yep.
And so what is your tip to him if he's going to go down this route to start incorporating leverage into his portfolio?
I guess the first thing would be to say, can I give 2?
Yeah, sure.
The first thing would be to say, always think about risk first. That's the big priority here because, you've had a great run. You've put in the hard yards, you've done the study and you've come out on top and you can just see how this is going to change your life, which is so fantastic. A credit to you. We're seeing so many students reporting back this at the moment, which is fantastic. So now it's about thinking about risk and how you're always going to mitigate that going forward and how you structure a portfolio around a margin loan. So the first thing is if you've got $1, only invest $1. I think Dale talked about that in his book, How to Beat the Managed Funds by 20%. There's lots of great tips in that book. If you haven't picked it up already, then make sure you do. And the second thing would be just look at the risk across your portfolio. Now, I've been the believer of having gone through a GFC. We saw that happen to a lot of people. We did not get one margin call through that GFC for 2 reasons. One, because we had the principle of if you've got $1, then you can risk $1 or you can invest $1 or borrow $1. And the other side was the stop losses. That was a big thing, but there were so many people getting margin calls. I think we were the only company with this particular organisation who didn't get one. So I totally believe in the principles. But it's really about you nutting it out, putting it in a spreadsheet, thinking about how things are going to unfold. You can actually plot out, say you've done some trades and you've got some stocks that you've back tested. You can simulate how that portfolio would have gone with a margin loan before you actually take out any margin loan. I think that's really wise.
Yeah, they're great points. Now, can I ask you this? Because a lot of people start thinking this way when they talk about margin. Do you have to change the way you trade or the instruments you trade when you deal with margin, or can you still do exactly what you were doing before? It's just that obviously added layer of risk that comes into it. Because I'll speak to so many people and they think when you talk about margin or CFDs, you've got to trade a different or a new way, which I'd love to get your thoughts on that.
Well, people are going to have different views on that. So, you know, generally margin loans that were designed for people who had a more medium to longer term approach to the market. So CFDs are typically more shorter term to get leverage that way. So it's more about structuring it for that medium term, and where you get good stocks that pay dividends so they can pay the interest bill. So that's part of it. So that's taking some of that risk off for the interest. But it's more about just having a really good strategy. It's not so much changing what you're doing, but always checking back to see what that risk means. And it may be that someone might decide to set different stop losses. When they do their back testing, they go looking for a tighter stop than what they had before. But it really depends on the stocks that you're putting into that margin, you know, in the margin loan portfolio.
Great advice. All right. Well, and good luck again, and well done on the way you're performing at the moment. Now, Samuel's email is next. Can you please review Hazer, code HZR? I bought in at 52 cents in 2024, but the stock fell away. Now, I jumped in way too early, so my plan now is a stop loss at 35 cents. All right. Two things with this one. I'm going to go to you again on this one, Janine, because I know you're the experienced hand here. Anytime I hear I now have a stop loss after the fact, to me, alarm bells go off. But, you know, what are your thoughts on that? Because he's obviously gotten in and the stock's fallen away. Now he's thinking about a stop loss after the fact.
Look, I guess it comes down to we're only where we're at you know, a particular point in time. So, you know, we all have to go follow a path. We've all made mistakes along the way. That's just the reality, and you have to do that along the way. But I take my hat off to the fact that you've learning about this stuff with us, and you're seeing that there is a better way, and that is setting stop losses. And now you've got one in place. So, and you can see that there was a consolidation. If we go to the chart, you know, is this a logical place to put a stop loss now? I mean, if someone had entered through this move, and I'm just going to expand it up, you know, is this a logical place to put the stop? And I would say yes, it's a good place to put a stop loss. And it depends on the strategy, obviously, that you were taking, but just looking at the monthly chart, it makes sense. So it could take off from here. There's a possibility. This could be an accumulation phase and the stock could rise. The question is, have you developed the discipline to actually follow it through, and will you?
Yeah.
You know, on a stock like this, a highly volatile stock and a liquid stock, to go into it without a stop loss tells me too inexperienced for this area of the market. However, you're in it, you're managing it. That takes discipline, and, you know, I think have a go at it, and all the best with this one. But I think, you know, if you want to trade at this end of the market, it's even more of a reason why you need to get the education and have that structure. I can tell you, I have met countless people who, and a lot of males in particular, who traded at the lower end of the market and they got wiped out, and they came to us not because they didn't know how to trade from a practical point of view, but they wanted to get that structure and discipline, and understood that if they pull both together, that experience that they had plus what we can give you, it just makes a massive difference to the way that you will, you know, perform and succeed in future.
Yep. Perfectly said. All right, next we have Aaron's email. I was wanting your thoughts on Neo Metals. Every few years it goes on a run, and it seems to be due for another one. My gut is telling me to wait, but I don't want to miss out on too many potential gains. Now, Pedro, I mean, this is a little specky stock, but again, another email with the words, my gut feeling, and I don't want to miss out. Please give us your thoughts on what should be going on with this one.
Yeah, they're those typical emotions, unfortunately, that may lead to bad decisions. And Aaron, I'm not sure what your experience level is like, but this stock looks quite dangerous, especially trading at these levels here. These are the levels that you see sometimes stocks even get delisted. And I can talk from experience. I've seen that with stocks trading at this lower end here, and they come out with some bad news. It's obviously being sold off for a reason. And I don't see any reason to be looking at this stock at the moment. Your gut feel may come from maybe knowing the backstory behind this stock. You may have researched it well. You may know some news about it. But technically, it doesn't look too good. I mean, it's breaking new lows every time. So it's had this massive spike here only to get sold off again. Imagine if you participated in that run thinking that the run is over, only for it to get sold off again. And then once again, we've seen a spike and then once again sold off. So why aren't these runs being supported? Why aren't buyers coming in and then continuing these runs? This doesn't bode very healthy for this stock. You want to see ideally something like this, and then maybe a retest and then a continuation of that run. We're not seeing that at all with these runs up, and it seems more like short covering than interest in this stock. I would say that if you're more of a beginner, learn about technical analysis and have a look at some more liquid and higher cap stocks before going to these. You'll save yourself a lot of losses, and you'll gain the experience that you need to identify these types of things on the lower end of the scale here.
Yeah, I mean, and I'll ask you this question, Janine. It's not a hard fix. People think, getting this stuff right, it takes, you either got to be a mathematician or you got to be a scientist or you've got to be a computer whiz. You really don't. But it's unfortunate that, so many people coming to the market, those words come out, I'm waiting to get in, or I need to get in, or my gut feeling is telling me this. But the market, gut feeling and the market, they don't go hand in hand. I mean, the market doesn't care about your gut feeling. It's about following and reading what the market is doing and jumping on board with what is actually happening. And that only comes through knowing and understanding what is happening. There's no room for guessing. And so, I mean, from a practical point of view, would you add anything else to Aaron to say, hey, mate, maybe take these 1 or 2 steps now, forget about looking at these kinds of stocks, or forget about even looking at these kinds of charts. Start here today. Pick one stock, I don't know, some advice in terms of how to turn this thing around to get on that path of doing it safely and consistently, and then down the track you can go and look at this kind of stuff.
Yeah, that's great. I mean, you've already given him some tips.
Oh, sorry.
Long commentary. What I would say is, Aaron, you're looking at this stock, there's always something that we can see on a chart, or we think that we see on a chart, and looking at that test of that low, I can see what you may be thinking, that maybe this is the bottom coming in and this could be the start of something indeed. But what Phil and Pedro are saying is really important advice to you. And I guess sometimes we could be trading something like this when we're first learning, because we even though people tell us not to go to this end of the market, and we do. But the problem is that we then, if we have a loss, or if we have, even if it's a win, then we're chasing that, whatever that was, and chasing that emotion. And Phil talked about gut feel. Gut feel can have a place, but it only comes once you've had knowledge and experience to back it up. So that's the most important advice that I would give to you. You could have intuition. This stock, maybe it will go up. I don't know. I mean, we just have to wait. But all we care about is confirmation. We don't care about whether we think we're right. We only care about whether it confirms what we're thinking is right, if that makes sense. And that comes from, having a couple of years of good training behind you, and then you'll start to really get that.
Yeah, all right. I hope that answers it. But thank you very much for emailing in. Please keep them coming. Now, we do have another one. Johnny's next and writes, you did a video on ETFs last week, and I have a question regarding them. Is there a way to invest directly in the stocks that ETFs are buying as a way of trying to outperform them? For example, you guys brought up HGen, a hydrogen ETF, but would I be better off investing my own money in the top performing hydrogen hydrogen stocks such as HZR or FHE? And should I be tracking the ETF and the stocks against the energy sector? Now, Pedro, I'll go to you on this one because this is a fantastic question. Maybe speak a little bit to the ETF, I guess, movement relative to the stocks, what risks there are in terms of going directly to stocks versus ETFs, and all that kind of stuff.
It is a great question. And I would say, first of all, look at the weighting of the ETF and look at the stocks within it. So if the stocks that you're looking to trade have a big weighting in the ETF, that means that the ETF is going to look very similar to that stock because, it puts more weight on that certain stock. If you're looking at a bunch of them, say maybe 4, and all 4 of them hold a large weight in that ETF, then again, it's going to reflect their movement. So in that case, it may be better to just trade the stocks themselves because you're going to get exposure to the actual business itself, and you might get some dividends along the way if they do pay those dividends. So you could also, maybe hedge yourself and invest in the ETF as well as the stocks. That could be another option. You could have that in your overall portfolio. And of course, we show how to position yourself evenly, along different positions to kind of, limit that risk a little bit. But for sure, an ETF could be treated as a stock in itself. So I would say that, by all means, look at the stocks within it. And you could actually have a bit of a strategy using everything there. Yeah,
what we might do actually, seeing as we're on this topic, we'll bring up the ETF and also the stock. It was HZR, I believe, and the ETF was HGEN. So while Janine's preparing that for us, we'll get into it and have a good look because, I'll take your point. Just one more thing on what he said about using the underlying commodity to follow that when you're talking about, trying to measure the ETF or follow the ETF. Is that something you will do regardless of, I know people do it with stocks, especially the miners, they look at the underlying commodity for those explorers in particular and use it to identify whether the stock's on the right trajectory or whether the underlying commodity is supporting that stock price or will. Is that similarly applicable to ETFs?
I would say in this case, it's a good thought. It is a good thought. It's called intermarket analysis, and a lot of people do that with ETFs, but not in this case because it's the ETF that tracks the underlying stocks. It's not the other way around. With commodities, it's the stocks that track the commodity itself. So of course you can have a look at the commodity ETF or a commodity index and then use that to trade the stock. But with this, it's the other way around. The ETF is tracking the stock itself. So I would say probably not the best strategy in this case.
All right, fantastic. Now let's get to the charts and have a look at Hazer real quick, Janine, compared to the ETF.
Okay, so there's Hazer. I've got the monthly chart open. We can see the ETF, which is the green line coming down there over the chart. It more or less has tracked it all the way down, as you were talking about before. And now the ETF's shot off. There's obviously a stock within the ETF that's doing better than Hazer. So sometimes it's a matter of when we're looking at this sort of stuff, we get a workbook going with the ETF, with the stocks in the underlying, and just scroll through them and see which ones are more likely to take off. But maybe this one's a bit late to the party and it just hasn't gone through that high yet, and once it does, could be off as well. But that's not a certainty, however, because not every stock's going to rise as strongly as the strongest one in that ETF.
Yeah, good advice. All right, now time for our hot stock tip for the week, and this is a very, very interesting stock that a lot of people have on their lips. Pedro, what is it, mate?
All right, this week we have Mineral Resources, and we've just got news come out that they are selling 700 million worth of company bonds at paying at 7% interest. And this is basically to cover a different debt that they had earlier, which was paying, I believe it was 8.1 to 5%. So they're basically refinancing old debt with new debt, and they've got a longer time span to pay that off. So it's a good sign. It's not going to be something that's going to be very critical for the stock price, I would say, but the level that it's trading at is looking quite interesting. So I'm just going to take that off for the moment. we have seen price bounce off this level here, which is around that $13 to $14. In the past, it's been a very important level for the stock. It is trading up around that 172%. When you think about that, it's done that since April. So it's done that in only 4 or 5 months, which is pretty remarkable. Right now on the weekly chart, we're seeing a little bit of a slowdown, but it's still holding up above this momentum here. So if we were to maybe be a bit more conservative with that, we could draw the momentum as so. It could have a little bit more of a dip. In that case, we could see a bit of a fall of 22%. However, if it does start to gather a new momentum and start to trade up around here, then we're talking business. That's where the stock could rally all the way, up to possibly the $56 to $57 level, and that means that we have an upside of around 40% to get to there. Of course, we do have some other levels before then. I would say that this was quite a strong resistance and support level in the past, so we still have to break above it. But if I just take that off, I think that it's getting to a very critical time. It's an interesting pattern unfolding here. If it does manage to break above that $42, then that is looking quite nice. And Mineral Resources, it's a well-diversified company. They're in the lithium space as well, and we're seeing the lithium players start to track up as well. So all in all, I think Mineral Resources looking quite nice.
Yeah, and I can see that the volume really is coming in on that stock. And by the way, I thought Pedro was going to give himself a bit of a boost. We looked at this stock a few months ago when it was approaching $20 and said, hey, keep this one on your radar.
He didn't give himself a plug at all, did he?
He didn't. He's being very nice. I thought you'd give yourself a plug, Pedro.
Yeah, that's right. We're always patting ourselves on the back on this one, so I thought I'd give it a rest. But yep, for sure, I'm always up for another one.
Yeah, fantastic. All right, now if you want to see that video, go and check it out on YouTube. But if you want more from us, check out our video, buy these bargain ASX stocks before it's too late.